Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. If you look at how central banks try to rein in inflation, or more importantly, expectations of inflation, they often use the good old method of speech. ECB Chief Lagarde used this to her full advantage by delivering a hawkish speech yesterday, basically saying inflation fight is still on and more hikes are needed. On the US front, there were two more data points of durable good orders and consumer confidence. While domestically, and it is something I want to ask Pankaj. Good morning, Pankaj. Welcome back. Do you see India receiving a credit rating upgrade?
Yeah, thanks a lot, Swaraj. Good morning, everyone. Yes, we shall start today with India-specific news first. S&P upgrade Indian banks, HDFC Bank A minus from BBB plus, ICICI Bank and SBI both upgraded one notch to BBB from BBB minus. And I would take SBI as a proxy for an Indian government credit rating. And I'm seeing that we are on the verge of a rating upgrade. It might be 6 months down the line or 12 months down the line, but we will be moving to a BBB very soon. It seems so. In current account, numbers also got released yesterday, and that shows a marked improvement for Q4 versus Q3 of FY23. And the main influencing factors were improved trade numbers and rise in net services export. However, on an annual basis, the deficit was at a 2% versus 1.2% in previous fiscal year. As overall trade deficit was higher by more than a third. Now, we should be looking into perspective of that at the beginning of the year, everybody was expecting a current account deficit to exceed 3%. We actually closed with a 2%. And that's a good numbers to look at. If we go with some kind of coming time, what we can look at and we can forecast it, with the expected moderation in both imports and exports in current fiscal, which I'm referring to FY24, due to global slowdown, we may look at a lower current account deficit subject to strong trend in remittances being maintained. And that's one of the main factors we have to look at. Last quarter, in I think March quarter, we received closer to $26 billion in remittances by NRI, and that's a good number to look at. As for a balance of payment, fluctuation in FPI flows affected by high interest rates in the developed countries, projections are challenging, but we expect FDI flows to improve. Looking at the recent commitment of global investors and their attraction to the robust growth story of India. We saw a very good hang around when Modi was in US, our Prime Minister Modi was in US. So we expect that the FDI numbers should increase further. A possible upgrade of Indian sovereign rating can see higher flows and improve the external balances further. I think by the time news will come, all this will happen. We are still looking at the possibility of an inclusion of an Indian bond in global indices, which the hope is still alive, and that will attract a good amount of flow. Now moving to the global economy and specifically to US economy, the data itself was a very, very robust and it was painting a very good picture about the US economy. If we look at the new home sales number, they recorded the fastest annual rate in more than a year. Durable goods order also topped estimate with the headline print showing as descended 1.7% versus it was expected to be falling 0.8%. If we look at the US conference board consumer confidence, this number improved dramatically from a 102.5 to 109.70. And this is the best number printed in 2022-23. The improvement was both in current situation and the expectations component of the index. If you look at the resilience of the economy as borne out by the raft of data on housing, manufacturing, consumer confidence, which actually helped the rally in US markets, where investors seem to think that economy may be slowing, but definitely not collapsing. And that's good indication. We saw a very good amount of a rally in NASDAQ, and now a tech-heavy NASDAQ is up 29% in first half of this calendar year, and that's a good number to look at. European stocks also recovered, and MSCI index of Globe also gained by 0.93%. A very good day for equities yesterday. Even India rose by almost 0.6% yesterday, Indian NSE. Due to these all, we saw a profit booking or maybe a further downtick in gold, and gold moved to a closer to 1920. Now, these are the good support areas for the gold. Even bond yields move higher and 2 years moved to back to 476, and 10-year moved back to 376. These are the a kind of I would say the 3 months peak on the yield side, and market is now discounting a 76% probability of a rate hike of 0.25% by Fed in the July. Before that, market would be looking at a core PC number on this Friday, and then CPI numbers will also be coming. The meeting non-farm payroll and CPI numbers. The Fed next meeting is on the 26th July, so still a 1 month to go. We also saw that there was a kind of some strength in euro after hawkish comment by Lagarde at a Centra conference, and there's an improved risk sentiment leading to dollar selling by investors. We are almost close to 1.10 again on the euro. There's some kind of a fear of intervention by Bank of Japan and Chinese central bank, and that's the reason dollar index did not make much of a headway. We will be taking a clue from a core PC number, which is due on Friday, GDP data tomorrow, and Powell speech in a panel discussion on central banks meet in Portugal. Let's see how it goes. Coming back to the final thing is a dollar rupee, which has not moved much yesterday also. It was 81.95 to 82.03. That's the range. There was a buyer from a PSU bank, and there's a sellers from the market side. There was some rally in the Chinese yuan after lower fixing by PBOC, and there was a reported intervention in Chinese yuan yesterday. Even that has not actually impacted rupee. That's all from me. I think today's range would be again between 81.90 and 82.10. That's all. Thank you. Have a nice day.
Thank you, Pankaj. And rupee not moving much, I think that's a common theme that's been going on for the past few weeks. Well, just to quickly summarize, I think broadly from a BOP perspective, what we have seen is a overall moderation in our current account numbers, while that might be supplemented by the capital flows due to various factors like credit rating upgrade and a possible inclusion in the bond index. Economy in US is slowing but not collapsing, as it seems from the US data released yesterday, which also led to a good day for overall global equities. Gold saw some profit taking, reaching good support areas, and the upcoming event is of course the core PC numbers on Friday. That's it from us today. Thank you so much for listening. Tomorrow is a bank holiday. Tune in on Friday for another round of fresh updates. Thank you.